All right. Welcome back to your favorite comedy finance channel. Don't forget to like, share, subscribe. So I got a date with a set of cheeks tonight. But I did want to bring up, a quick video with you guys because we have a serious swing coming up. And as you know, that particular bank, regional bank, went down and the government is basically seizing it. So it's only a matter of time until they figure out how to bail it out and go through the same thing that all these other banks are going through. So, we know for a fact that we're going to either get good or bad news by Tuesday or Wednesday. So the next Fed meeting is Fed the 2nd to the 3rd. Now, in the grand scheme of things, to give you guys a quick refresher, okay, don't forget, all right, so the next meeting, you got May 2 to 3, you got June 13th to the 14th, and then July the 25th to the 26th, okay? Now, the last time the banks collapsed and they had to bail another bank out, like SVB, and I do think Charles Schwab is going to be the next one, but, at the end of the day, they need to bail these banks out or somebody needs to bail them out regardless, But again, this is bullish news for Bitcoin, right? Bullish news for ETH and, just the entire macro market. So, I do feel like at the end of the day, I think Tuesday is going to be a major swing day. And, what a lot of people, and I was talking to people on ODAP just this morning about how a lot of people forget that you're kind of betting against, the economy. And a lot of economists or political leaders, they're never going to admit this to you, in your face. They're never going to say this on TV, When the economy is doing bad, the markets are always bullish because inflation drives assets up, okay? And I know the narrative right now is that, inflation is bad for assets, but that's just simply not true. This year we're experiencing real inflation. And 2022, we were not experiencing inflation, okay? We were experiencing deflation in the markets. Now, there is a difference between inflation in the markets versus inflation in the economy, okay? And I get the difference. I get that, But when it comes to why we even watch these people to begin with, okay, whether we're staying up to date on the Fed or why we even keep up to date watching a variety of other figures that are mainstream, we want to know what's going on, right? We want to hear their version or their forecast of what's really happening. And unfortunately, not a single person in the mainstream media has ever said that inflation is good for assets. And they always continuously say it's bad. And what happened last year, the dollar, deflated to about $1.14. And around that time, we knew that a lot of assets were going to start collapsing, including fiat currencies from different countries because of the weight of the dollar. Because when the dollar's up in value, it's weighing asset prices down, and a lot of people get bearish over this. But, I get that. But you should be utilizing the buying power while you have it, okay? Because we're already watching just the domino effect of all these banks collapsing and then needing to be bailed out, okay? Now, a lot of people are still in the air about when the Fed rate cuts could happen. We did talk a little bit on ODAP during our last voice conference. And for those of you that aren't on ODAP, or if you are on ODAP, don't forget every Wednesday at 10 p.m. Eastern Standard Time, we have a voice conference and we have a weekly forecast, okay? We talk about things that we're looking at, different picks or, whatever the case. But going forward, put it this way, we can't forget, because this domino effect is happening, it's going to be bullish for the markets regardless. And, I do know that your inflation rate right now is 5%. The federal fund rate is 5%. If the interest rates are not superseding the inflation rate, then you're never going to cool it down, okay? And what we're dealing with right now in the grand scheme of things within the next 60 days is bullish territory on the count that the debt ceiling needs to be raised. Now, JP Morgan has said, that we could get a raise probably between, I want to say July, or some people are saying September. But I don't think that's going to happen based on what's going on, because to be honest with you, you know, that little prank that they pulled on Jerome when they were saying that, oh, you know, they tricked him, you know, they got him, you know, they pretended, you know, that he got a prank call and he pretty much blurted out that he was going to raise rates for the next 2 times, right? It wouldn't matter, because by the time the debt ceiling needs to be raised, okay, and keep in mind, we just got through telling you what the scheduled events are for the Fed conference. If you guys go into ODAP, if you click the pin section in the crypto channel, you'll notice I've placed different schedules that you need to pay attention to, different reports that are coming out, different picks or whatever. But I do, at the very top, you're going to see the Fed schedule, okay? And that is basically the pace at which they could raise rates, pause rates, or cut rates. If we're 5% to 5% right now, you know, 5% inflation, 5% Fed rate, okay? We're still not superseding. And this is based on the monetary supply that we have right now. And the monetary supply right now is not going to be the same when it comes time to lift the debt ceiling. So this is going to raise the inflation rate in the grand scheme of things. And the reason why I was talking about kind of bouncing around between all these different inflation reports, why investors don't really admit, you know, or why people don't admit that inflation is, you know, good for assets, you know, is because there's an ethics or a morality behind why you don't want to say those things. Because unfortunately, you know, when the economy is in the shit and people are suffering out there, the markets are going up. And, you know, it's weird the way it works, but, you know, if we had more Americans that were educated enough to understand when the bankers are utilizing inflation and deflation to pay off massive amounts of the debt deficit because of their overexpenditure or their overexpansion of government, you know, then they would be wise enough to get out of that dollar or get out of whatever currency they're in based on these policies and utilize what they do to pay off their bullshit, to pay off our bullshit by utilizing that inflation we know is coming. Now, everyone is always continuously asking, oh, you know, are the markets going to go up? Or are they going to go down? Well, in the grand scheme of things, yeah, they're going to go up. You know, of course, you know, you're going to have big dips, you're going to have big crashes. But, you know, if you got a plan or if you're going to be here for the next 10, 20 years, you know, and a lot of people say they're not, but you're going to stay in the market. It's no different from like an IRA or 401 or whatever. That's going to be your retirement plan at some point, right? So, but anyways, in the grand scheme of things this year, let's say, if the inflation rate is 5%, and the rates that the Fed is pushing out is 5% right now, they even if they were to do a 1/4 point raise or a 2/4 point raise within the next meeting and the next one after that, I don't think they're still going to be able to catch up to the inflation rate by the time that expansion happens for that debt ceiling. Okay. During our last meeting, we were also taking a look at it from the rate cut standpoint. I still don't think it's going to be a rate cut. I thought about it, but some of the guys we were talking, and, you know, if it goes for a rate cut and you have the monetary system expansion coming up, you know, then they need to make this money more accessible, which would mean, you know, rate cuts and make financing or funding more accessible. Right. And okay. Yeah, that makes good sense. However, I think that forecast is a little bit too early. I think we're close. I think that might happen Q4. Okay. And the reason why is because nothing is working, you know, but it's, you know, what's not working hasn't been revealed yet. Okay. So, you know, like I was saying, we got a meeting the 2nd and 3rd. We're at 5% to 5%. Okay. Let's say if the prank is true and, you know, Jerome raises it by a 1/4 point, which I think he should, you know, why not? You know, he could show face raising rate 2 times before this thing really takes off. Because what's going to really take off inflation is that debt expansion. Okay. And once that happens, you're going to be adding a $1.5 trillion to the supply, which is what they're discussing. You guys never know. They might come back and say, well, we came up to an agreement. We're going to do 2.2 trillion instead, you know, or whatever. It doesn't really matter. But at the end of the day, this is still easing. It's still stretching the dollar. When the dollar is elastic, you know, you're stretching the dollar. So therefore, it's going to cost more dollars. Or put it this way, guys, you have more supply in the system, it's going to cost more dollars to buy the asset. Okay. So if you're buying assets today, right? Or if you were like us buying assets when the dollar was 105, 110, and whatever, we were buying way more asset than it took for the liquidity that we were dishing out. And that's why the stacks are better. That's why stacks are better to stack now. And I think a lot of people forgot about that part because, yeah, you go through that crash time, 2022, you go through that nice pump or whatever. But I do think that we're going to be traveling sideways for a while, which is still bullish for alt season in the long run. But what I'm trying to get back to with the rates is I think we're going to maybe live through another rate hike, maybe 2. And then by the debt expansion time, at that point, that next report, they're going to end up realizing that inflation is taking off because of that expansion. And once they realize that the debt ceiling the increase in supply in USD is taking inflation higher, because inflation right now is 5% at today's monetary supply. Once they increase the monetary supply, then the inflation rate's going to go a lot higher than 5%. So whether Jerome raises it a quarter point, 2 quarters, within the next 2 meetings, you still got the deadline for the debt ceiling, which is going to happen between June to September. Okay, I'm thinking June, but JP Morgan and a lot of these other economists, that are clearly, maybe they're way more qualified than I am, but at the end of the day, they're thinking July or September or whatever. So at that point, let's take a look at the schedule for the Fed meeting. I put the Fed meeting inside Odd App. You guys could just click the pin section and then it'll drop down, and then you guys could take a look at the schedule, because you have to think about what they're doing in regards to time. Let me see. I was trying to charge my battery, and let me see how much time I got here. All right, I'm still good. I got about 7%. Okay, I was actually going to try to get on earlier, but my computer was basically almost dead. But you have a meeting 2 to 3, so that could be a quarter, and then the next meeting is June 13th to the 14th. So whenever I'm measuring, the cap on the dollar, I don't measure it in regards to how much supply there is. I mean, yeah, we know how much supply there is or how much debt there is. You have 31 trillion, all the bullshit. Okay. But when you're talking about the debt ceiling, I think about the cap. Okay. And you guys, especially for those of you in crypto, you have to think about tokenomics. What happens when you get close to the cap? When you get closer to the cap, a lot of compression happens and the coin of the price of the coin goes up, right? And if you take a look, as we get closer, like I've been saying, as we get closer to that debt ceiling deadline, it's going to start compressing in value. So I still feel like the USD is still going to do 101 to 103. But then as soon as that easing happens, it's going to be a lot better, where it's going to go beneath that 100 cent mark in quarter 4 is what I'm thinking, or late quarter 3. By that time, I feel like a lot more, clearly a lot more could happen, but that's just kind of my overall forecast on where we're at for this quarter and going into next quarter, stuff like that. I don't think they're going to be able to catch up to inflation rate. Right now we're at 5%. Rate is at 5%. We got 2 meetings ahead of us till July. Okay. So if that's the case, you only got, a couple more months or so to get the rate past inflation rate. Okay. And they're not going to be able to, because by the time they get to that part where they're trying to raise that rate, inflation is going to take off because of that expansion that's due. They're not doing it fast enough. So I think this is where I think that's why we're going to have a bit of a whirlwind, and again, it could come sooner too, with a lot of these banks collapsing, and JP Morgan, he's already said that he has $2 trillion to the sideline, which conveniently is about the same number of liquidity within the reverse repo market. Nobody's paying attention to the reverse repo market. If you want to know where this money is going to be coming from when it floods the market, it is from the reverse repo market. Right now, there's about, I think, $2.3 trillion worth of liquidity that's supposed to be injected into the banking system at some point. It's been accumulating from all the interest rate hikes and stuff like that. But I think that that's their safety trigger. You know what I mean? Like, I kind of feel like they're going to wait till something for real breaks, and then they're going to liquidate that thing to zero. Okay. If you take a look at the chart, and if you guys aren't familiar with the chart, I pinned it up in ODAP. You can check it out. You could take a look at every single time that they filled liquidity within the reverse repo market and then drained it down to zero. The last time was 2020, and now it is at a wild ass level. So I really do think that eventually, when they got no more playing room, they're going to end up liquidating that to zero, which is going to expand the monetary system to the point where all those guys were buying, okay, the things that you buy today, the things that when the dollar was higher value, okay, money, because when there's more supply in the system, these assets are going to be worth more money. And that's kind of the whole point. And you could take a look at that from a precious metal standpoint, whether you're looking at gold, silver, or like my favorite right now is platinum, or you could look at it from a stocks or, a crypto side of things. Okay. Not to mention for some of you that do leverage trading, what happened the last time a lot of these banks started failing? What happened? Bitcoin did a mighty swing, and again, we're getting closer and closer to Bitcoin halving, which is pretty much I think like for quarter 1 or quarter 2 of 2024. By the time you get to those times, I feel like Bitcoin's going to be a lot higher in peaks, and what people are thinking in their heads, or a lot of people, some people I run into, they'll sit there and say, they'll sit there and say shit like, oh, well, I'm not going to get into market till mid 2024 or, early 2024, but it's not, you think that it's just going to go straight up from there? You're going to get a lot of growth between now and then. And that's kind of the whole basis of collecting early and waiting the wait. And I feel like a lot of people forgot about that part, because a lot of people get impatient, Besides that, I do want to go over just some quick picks, guys. Some of the ones that I like, and keep in mind too, we have over 100 picks, stocks, crypto, all pinned up within ODAP, within the different channels, stuff like that. So I'd love for you guys to be there. I'm going to put my link below. And, one thing I do want to say is like, I know a lot of people see a stagnant price and they don't know if it's something good or whatever, but it's like, that's what you're going to get around this time. You're going to get stagnant prices, or you're going to get you're going to get slower growth pace, and a lot of people don't get that. Volumes are fake, guys. And again, centralized exchanges, the volumes are going to be very low because people are buying things like smart people and then shipping it out to their ledger. Okay. So don't get phased out by that. You have to look at things in the grand scheme of things. It really doesn't matter what's going on right now. Clearly the economy is going into the shit and the recession is coming. But a lot of people, the normal people, they think of recessions and they think, oh, I need to save money in my bank, which is how they're getting fucked harder. But, at this point, this is what I'm going back to. When the economy is going bad, if you take a look at 2009, 2010, it was one of the biggest, beastiest runs ever. Okay. So, yeah, there was a big crash, but after that crash, shit fucking took off, So I feel like a lot of people are forgetting about that aspect of things. Is like recessions are highly inflationary because there's a lot of different things that are defaulting. It doesn't matter if it's a repo. It doesn't matter if, it's bankruptcies or, credit card default. It doesn't matter. It's all default. These banks collapsing and being, taken over by the government. That's a default because they're defaulting on money they put out, so it's the same thing. All of these defaults are blows against the US dollar, which is ultimately going to send assets higher, regardless of what sector you're in. So I do want to just put that out there. Some of the coins that I'm more interested in right now, it's just my major 5, and I'm just going to keep collecting those. And, a lot of people, look, and I feel bad for a lot of people that got into the crypto market only in 2021 and they weren't there 3 years prior or 2 years prior, and they don't understand what tribulations you really go through to actually hold long term. It takes a while, it takes a while. So, and I feel bad for a lot of people that have a misconception about crypto and they call it fast money, or they have this misconception that, It's just so luck, and there's no perseverance in it. And I'm proud of our people a lot. I'm proud of a lot of our whales. I'm proud of a lot of our shrimp. And it's a game of perseverance, and that's why I keep telling a lot of our people that don't stop producing income, keep doing your thing. Don't rely on these markets. Right now it's accumulation time, and a lot of people that aren't experienced, or they don't know enough about crypto, or maybe they only been here for a couple of years or whatever. They forget that, like, about that time frame. A lot of people unfortunately think that things are only going to just be pumping and dumping and that's it. But there's going to be a time where you're going to see a giga pump and it's fucking over. If you're not in there, you're going to miss the biggest margin you could have ever had, the biggest multipliers you could have ever had. And, for me, and you guys do what you want to do. This is not financial advice. It's every man for himself. Don't fucking forget. But I'm a person that I like to long-term invest. I like to buy something, accumulate it, and then hold long. Okay. And holding long is more than a year. I want to get into the long-term capital gains range. Okay. And a lot of people think because of whatever they experienced in 2021, because they were late, or, they're uneducated about the things that they were doing, whatever, they think that everything is just going to be a pump and dump. It's going to happen in a month. It's going to happen in 2 months. It's going to happen in 3 months. It's like, no, guys, you guys need to wake up. Or I don't know if you weren't here, or some of I know our people aren't like this, but, I do want to make sure that you guys have the correct expectations about how long things do take. Because a lot of people, they bet on the market hoping, but the market could be irrational longer than you could stay solvent. That's a very big quote that I think a lot of people should know. But again, some of the picks that I like right now, I like ArcBlock ABT. It's definitely a good pick for me. I like JASMI, and ABT, I got in about 8-9 cents. JASMI, I got in at like 0.0029 or some shit like that. BLZ was definitely like a 6 or 5 cent mark. I think my very first entry was like around, I want to say like 13 or something, but I like that company too. I like Dragon Chain. If I know regulations are going to come at some point, so I want to be holding different projects that had scrutiny because of the SEC or whatever. So, because you think about it, once all that stuff gets overturned or regulations does happen, a lot of these things are going to blow up, But I also like, I love LCX. LCX is definitely a major play for me. A lot of people are, what's funny is a lot of people, back in the day, or last peak cycle or whatever, it's always the same type of people. They beg and beg and beg. They want to know the pick first. They want to be there first. They just begging for opportunity. And you guys are looking at the biggest opportunities of your life. So, for me, I'm going to continue collecting. And yeah, maybe guys, my goal was always somewhere in there 2025. It could go longer. It could go to 2026, early or late 2025. It's very possible. You think about it, Trump gets elected, you're definitely going to see rate cuts. To be honest, probably you're going to see rate cuts regardless. To be honest with you, I actually have no idea, zero idea whose idea it was, to have 3 Zionists running at the same time. Talk about democracy. But, look, don't forget to like, share, subscribe. Let me just talk about a few of them real quick that I've been taking a look at. Okay. And you guys, of course, do your own research, do your own thing. You can't get all of them. For me, I only got 5. I only like my 5. And yeah, a lot of our guys, they're all over the place, or they have different stuff. Guys, there's some of our guys got, sometimes people are really well off and they want to get set up, So look, ArcBlock, JASMI, love Parsec, Bluezill, Dragon Chain. Those are my favorite 5, And of course, some of the ones that I've been watching, I'll share with you. And of course, guys, look, and don't forget, if you're on OddApp, okay, OddApp is on Apple App Store or Google App Store. MYC, we created that app. It's private, secure, encrypted. It doesn't data harvest, none of that stuff. But anyways, don't forget, guys, LCX. that's going to be a bottom. A lot of people think it's going to go back to 3 cents, but whoever bought the 3 cent at the 3 cent mark, they're not stupid. Okay. They're going to be holding those bottoms very tightly. I guarantee it. Besides that, I really do like MCO2. MCO2 is definitely going to be a big thing for me. I like it only because I kind of feel like it's going to get ESG investing. We'll see what happens with it. ERN is another one I've been taking a look at. Now, I do have other caps that I like. Okay, and a lot of people think, we're a one-trick pony, or they know everything that we're doing based on a video or, whatever. And unfortunately, you're incorrect. I would join ODAP if you want to stick to the pulse. But, I do like TVK. That's another one. That's a billion coin cap. And don't forget, Jasmine is a 50 billion coin cap. A lot of these coins, I like small coins, small caps and large caps. It just depends on my entry. If it's a large cap, I want to be in there for the decimals. If it's a small cap, I want to be in there for the pennies, 10 pennies, 20 pennies, some stuff like that. ICP.